We are back and live here for this week's installment of the 6-5. Dan, it's not a Saturday morning. It is a Friday morning. We're both in Austin. It's great to see you, bestie. How are you?
Yeah, it's funny. I haven't heard us call it an installment before, but I kind of like that. Welcome back to the next installment of the 6-5. Yeah, so let's go with that. We are in installment number 208.
You like that?
I do. I like when we change things up. I mean, we've done a 7-5. We've been doing Saturdays, Pat. I mean, and now you're not even getting dressed anymore. I love what we've got going here.
Oh, I looked in there and, I was on the big stage yesterday and I just decided, what looks good is a t-shirt and a hat. It was raining. It was dark when I got to work and it was raining and I had a huge trench coat on and decided that we didn't need a trench coat for the show. But no, it's great to see you, buddy. I'm soaking all this Austin juice in. It's nice to be home.
What were you on the big stage for? Don't be shy. I haven't seen a victory lap. I'm dying.
Oh no, I interviewed Michael Dell on the big stage. We had it was 1,000 people in the room. I'd say we had about 950. But no, talked about Michael, his life. I mean, went all the way back to him being a kid and all the crappy jobs that he had that, by the way, you and I had when we were little kids. Talked about his kind of philosophy of innovation, philosophy on culture, technology, AI. Catch it on the rebroadcast. It's on YouTube and it's on the South by South website. But no, Michael's just an amazing guy. I mean, geez, he's worth over $100 billion, and I'm really honored that he knows my name and that we get to spend time with each other on stage.
Yeah, I've told this story privately, but I mean, you're this community, you're like our family. So, when I moved to Austin, I got, a lot of messages from people over time, but the first message I got, private message from anyone about my move was Michael. Slides into my DMs on Twitter. It sends me this long kind of, I'm so happy to hear you're moving to Austin. Here's all the things that are amazing about this city. Don't be afraid to reach out. Introduced his wife, so that my wife, if she had questions, and of course, I didn't really ever take him up on it, but like he was genuine. Like it was amazing, genuine outreach and a warm welcome. I mean, this city is, Michael Dell in Austin. I mean, how much of this city has he helped to build and to create and flourish? Hospitals, college, buildings, art and history and culture, not to mention bringing tons of employment to the community. I mean, Pat, I was, only mildly envious, but I can't wait to watch back the replay. You guys looked great though. I saw you star-studded on the red carpet and you were wearing clothes instead of, looking all buff in a t-shirt.
No, I appreciate that. No, Dan, it was fun. So, hey, we've got a good show for you. We're talking more than Michael Dell and South by Southwest. We're talking ARM, Cadence, Oracle, Adobe, OpenAI, not as in the company, but the notion of OpenAI that was discussed at South by Southwest, MongoDB earnings, and plus got a major design win that we want to talk about. And then maybe at the end, we're going to talk about the 6-5 Summit 2024.
I would like that, Pat. I would like very, very much to talk about 6-5 Summit 2024. That would be fun.
That's good. So, hey, let's dive in. Oracle had earnings. Hey, did OCI blow out and were apps at 20% like the last 4 quarters?
Look, the company had a strong result. It had a beat. From a guide standpoint, it was where people wanted them to be, and more importantly, the company has continued on its trajectory of overall strength against the market. And why do I say that? Well, it wasn't like one of these mega blowout triple-digit growth areas in cloud that, we've seen Oracle have. And Oracle, of course, chasing a little bit, not being the biggest, but being, it's arguably gone back trying to be the third, fourth competitor. I think on a size-wise for its infrastructure, it is still sitting at fourth. But if you look at the total, aggregation of the business and the cloud, the company also had some really positive news about what it's calling the largest AI data center in the world. It's partnering up with NVIDIA. I think that alone gave the stock like a 47% bump. I'm joking. But it did get a pretty nice bump when it talked about the AI data centers that it's building out in partnership with NVIDIA. So where did the growth come from? Well, I mean, look, it's overall cloud growth, 25%, nice mid double digit strength. And that cloud revenue is over 5 billion in the quarter. So you're talking about 20 billion of run rate on its cloud businesses now. The infrastructure business, 49% growth. And by the way, people were like, it's not that good. It's like, well, it's better than it. First of all, kudos to Oracle, as a lot of companies have created more opaqueness in reporting. They actually still are reporting a very crisp infrastructure number with OCI. And that's now about a $1.8 billion business this quarter at a 49% growth. So strong growth, rearing towards 10 billion of IaaS revenue. And then when you actually put all the other parts in, you got the SaaS business for cloud apps, SaaS business for Fusion, SaaS business for NetSuite. Those are also driving some real strength in the business. All double-digit growth, 14 to 21%, depending on which business you're looking at. And look, this is the future of the company. You got a company with really predictable. Almost 3/4 of its revenue is considered predictable, recurring revenue. Its cloud business is growing mid double digits. It's got the sticky product. Enterprises run. I always talk about this in SAP. People might sometimes talk about these older core ERP and core database solutions that companies have to run their businesses and say, oh, everything's going to move off these businesses and into these new born on cloud. It hasn't happened. It's taking a long time. It's very difficult to move and to migrate. It's sticky. It's high margin, high service rate, high attach rate. It's good business. And so, Pat, this was a good, solid continuation of growth against what I still consider to be a pretty mixed economy. I don't know if you saw this quietly, Pat, but February, highest tech layoff rate since February of 2009. Wow. So while we're all kind of sitting here languishing in this concept that GDP's up and the market is strong and inflation is going away, we're laying off people at the highest rate since right after the financial crisis of 2008. So it's not all great, but the deflationary aspects of tech like cloud, like Oracle, are doing well.
Good breakdown there. I mean,
Thanks.
When other SaaS providers are doing 10%, Oracle continues to do 20%. I think that needs to be pointed out there. And it's just so consistent. I mean, it's like clockwork, right? We saw with Salesforce, right there, their SaaS numbers went from, 2x and 3x to 10x. And I mean 10x percent, not 10x like 10x. And I think that's big. And I know that probably a fairer comparison would be to SAP when we're talking about ERP, but it's still impressive they can keep that going during this economy. OCI and the IS number, again, impressive. 3 years ago, they were nowhere. And here we are with giant. One of their biggest customers is Microsoft, right? We always have to know that that's the big case. Microsoft didn't directly use the word Oracle, but Microsoft is a huge customer of Oracle, and they're leveraging Oracle's bare metal infrastructure with GPUs to do a lot of their generative AI stuff on there. I don't think that takes away from that OCI number. I actually think it gives it more credence and credibility. I think there could be a question that, if Microsoft amps up their CapEx, where would that put Microsoft as a customer for OCI in the future? So I think it was a good fielding. Move to the next topic here. So ARM and Cadence both had interrelated automotive announcement. ARM, as we've seen, right, recently, public company, again, just crushing it, right? If you remember, I think it was last month, Daniel, that the stock price just freaking rocketed. I mean, after their earnings. And a lot of that has to do with getting new sockets, gaining market share, but it also has to do a lot with the sophistication of the IP that they're offering. And essentially what they did on the automotive side is they brought out three things. So new automotive enhanced processors with the V9 architecture. And the second is putting CSS, which is their ARM compute subsystems, which is a product where they deliver more validation, requires less work on the licensee, and they're able to charge a higher price. The third thing they did, which reminds me a little bit of what Qualcomm is doing with AWS, is they're enabling software testing that's cloud-based, as opposed to waiting the 2 years it might take to crank out a chip or a chiplet to be able to test. So now you've got ARM really going, and I like their expression of this bumper to bumper, right, all the way from an auto MCU, which is a very low end controller that sometimes competes with an FPGA, to zonal controllers, and that's essentially, hey, something like braking system, right? If you have a disaggregated design, to computer vision, right, where it's they add the ISP, and you can even add a third-party NPU to the cockpit, L2, and full autonomy. So ARM making a huge move here. If you look at their growth over the last couple of quarters, at least the discussion was, sure, there was growth even in declining market in smartphones because you had people going with bigger cores, but you had data center and you have automotive. So good progress from the company. And by the way, it was really cool to see ARM's highest performance server processors, right? The same IP that's used, let's say, at AWS for ARM Neoverse used in Graviton being put in here. And I think this puts ARM and Qualcomm even at more odds. I feel the two companies kind of colliding. There was a related announcement by Cadence that essentially, so ARM doesn't do the chiplet, but Cadence has a software development platform and a reference design for ADAS. So if you are a tier one, if you are a chip maker and you're looking to increase and enhance time to market, you can use Cadence's platform to do this. And the other cool thing some people might know is Cadence actually has its own NPU, and it's called Neo Neural Processing Unit, or NPU, and then has an SDK called NeuroWeave for machine learning. And they also bring DSPs to the table. So not only can you use their tools, but you can also use Cadence's IP to accelerate your ARM-based design. Isn't it crazy how, like, the new power players in here are IP companies and companies that you don't even have to be a chip company. You could be a Tesla and use their software to pull all this stuff together.
Well, I think that's really what it's all about. I mean, look, there's the new power brokers. And by the way, there's a desire for the power broker to pivot, right? Nobody wants to be over dependent. The world has seen, let's just talk about ARM's announcements around vehicles. Well, first of all, ARM, it's all about moving up the stack. It's all about being more value add, more white glove, offering more services, and being able to raise its core value, literally core value, across everything it does, and make more per core, per license, and be able to bring more companies in to use its IP to develop chips. I mean, look, we're seeing a world where manufacturing of silicon used to be for a very small number of players. And now you're seeing that broaden and be democratized, and companies and industry vertical solutions are being built, chips for robotics, chips for IoT, chips for vehicles, chips for PCs, chips for wearables, hearables, VR, AR. And it's opened the door to lots of companies creating unique designs, and these unique designs enable differentiation. Historically speaking, there was a very small subset of chip manufacturers you could work with, and unless you had a certain size and scale of business, you couldn't even consider building something custom. Well, now we're seeing obviously what ARM's enabling from a custom, what Cadence, Synopsys enable from an IP standpoint. We're hearing companies like Marvell and maybe NVIDIA that are entering custom to help actually design custom chips. You've seen over time gaming console makers partnering up with companies like AMD to design custom chips for custom gaming console technologies. And over time, the point is what it's done is it's opened up the world. So there was a period where there was a few companies that could basically develop ADAS technology, build the silicon, and then develop the software. And there was an era of NVIDIA and Tesla. Then Tesla went out and they figured out it could do it on its own because it got enough scale and size. It could design its own silicon. And you don't think companies like BMW and GM and Ford and Stellantis are all looking at this right now. I mean, right now a lot of them are partnering. Of course, we haven't seen a design pipeline bigger than Qualcomm's, but they're looking at it. They're looking and considering what gives them the ultimate amount of flexibility. This is why the digital chassis, flexible building blocks is so important. And ARM is saying, look, we're going to offer something too. We're going to enable this. We're going to empower this. This is what the future looks like. And ARM is moving in that direction. Having said that, ARM's also getting more expensive. People are noting it. I think I saw something yesterday about Sci-Fi having a super large bump in its licensing business this year. Why is that? Well, as ARM gains strength and has grown market and has more business and has driven more revenue and increased licensing value, there are more people looking for lower cost open source options, and you're seeing it open up the floodgates for RISC-V. This is an exciting world, Pat. I mean, this is an exciting demand-driven world where companies that really historically had nothing to do with chip making and chip design can find themselves in the chip making, chip design business because of what IP providers, licensing providers, fabs, foundries have basically opened up to the world. And of course, with silicon eating the world, Pat, this is pretty cool.
Yeah, some of the chip makers that were in the press release were Marvell, MediaTek, NVIDIA, NXP, Renesas, Telechips, and TI. Note that Qualcomm is not in there. So essentially, ARM is being the arms dealer to these companies related to the automotive space. Competition is good. I'm just amazed, Daniel, at that the business model and the math works out for non-chip makers, right? That's got to be a little disturbing. And we've never actually seen anybody talk about, so for instance, AWS doesn't say, hey, here's how much money I put in, and then here's what I got out, either cost savings, time to market, something like that. But given that somebody like AWS has been doing it for so long, I sure can't imagine that they would do something that lost money for 10 years.
Yeah, well, I think this is going to be a really hot space to watch, Pat. I think it's just getting very, very exciting. And like I said, every new architecture, every new licensee and licensor of technology, it just goes to show, Pat, that while the world was thinking software would eat it, you and I knew what would really eat it. And I haven't done a victory lap on that in almost a week. So let's call it one more time right now. Just, hey, something about silicon.
I do. Some people might say I don't know something about silicon, but I don't know. I worked for a company for 11 years that did silicon, ran product management, product marketing, corporate strategy, go to market. I mean, what do I know, Dan? And before that, I worked 10 years for a company where I specified which processors would go into my platform. I don't know. What do I want? I was a customer, a competitor. Now I'm a pundit. I don't know. What do I know? Let's move to the next. By the way, sarcasm is what I learned in the Midwest. It's what we do. It's our humor to get over the sadness. My love language, Pat.
Sarcasm is my love language.
To get over the sadness of there being no jobs. So let's move to the next one. Adobe Q1. Could they take advantage of the AI boomtown, Dan?
Yes and no. So Adobe had a top bottom, but again, when you make a top bottom, but you don't guide with a lot of confidence, the market tends to be incredibly punitive, which in this case it was taking almost a 10% battering after it announced this quarter. The company's performing well. It's claiming some strength in its AI portfolio, which I expected. Didn't necessarily come out and directly attribute a lot of how AI is exactly affecting revenue, which is something I'm eager and interested to hear more about. We'll be at the summit, I think, end of March, and we'll be hearing more about it there. The company created strong cash flow, Pat. It saw growth in, double-digit growth in its media, in its digital experience segment. So you had strength in some of its core and growth business areas, actually in the creative as well. Double-digit in all of them, but just low, like 10, 11, 12%. So, these businesses are growing. And remember, this is a company that's like almost all of its revenue is subscription. So you got to love that about the company. Almost everything is recurring. Makes it very, very healthy. On the document side, was actually its fastest growth, 18%. So that was strong. That was encouraging. It did announce a really significant buyback, $25 billion buyback. So I always say that's a vote of confidence that the stock company believes the stock is underpriced. And so while it created this huge sell, it also had this huge buyback where it could immediately initiate that, probably give the stock some stability and strength. But again, we're not stock or equities analysts. We're just kind of looking at this as the ground truth. Pat, the areas that I was super focused on for the company was, how much is AI influencing its business? From Shot News commentary, it sounds like it's strong, but I would love to hear more specifically from how much dollar-wise, how much net revenue expansion, how much stickiness, how many new customers are coming over, and what the AI impact is. We did see there has been some scuttlebutt in the marketplace that Adobe's Firefly and image generator is having some of the same sort of issues that Gemini had as it relates to historical accuracy and imagery. And this is really sensitive because I've been very impressed with Adobe's sort of approach to ethics and licensing IP, not scraping and abusing content, but using real licensed content and such. But there is a lot of sort of uncertainty right now with how these models are developed, how they are governed, how they are insured for historical accuracy. And this is going to be a sensitivity for some time as we try to get to a balance of generative AI that is conscious of societal issues and norms, and at the same time is demonstrating that it's accurate in its depictions of things like history. So we're gonna have to watch that a little bit. Not a direct impact of earnings, but something that I think a lot of people are paying attention to right now after Google had its recent woes with Gemini. But Pat, look, this is a healthy business, strong, robust growth, multi diversifications into different spaces, including creative, including data and experience, CDP, as well as media space, Pat. But solid, but conservative on the guide. And again, it goes back to what I talked about. The market strength maybe is a little overdone in terms of how it's being presented. But we're in election year, so who knows what we're hearing anymore and how accurate any of it is. We got to move people to the vote to the polls, right? So stories will be stories, and you and I are here to hopefully uncover what the heck is really going on. That's what we do as analysts.
So I'm going to take a slightly different tack. So first off, there is going to be an analyst meeting at Adobe Summit in 2 weeks, which I think is really where I'm hoping we will get a lot of the answers to the growth questions. Without even looking at their numbers, I think the biggest impact, without even knowing exactly what their AI numbers are, I think this has a lot to do with, I think they're going to have amazing growth, but they have so many users, right, in the hundreds of millions. To flip all of them to the next new thing takes time. If I look at their big opportunity, if I'm a company and anybody with money who can be sued for copyright infringement, and I would even put, my gosh, I remember using an image that I mistakenly used. I thought it had an open license, and then I used it on a blog, and they came after me and they were going to sue me unless I paid them $8,000, right, for a license. I don't know if it was Getty or somebody like that. Total mistake. It was an editor who had put that in there. So imagine we're in this world where, your DALL-E 3, your Midjourney, right? OpenAI, your Sora, right? We have no idea where you're getting your content from and what your basis was for learning. If you're a company with enough money where it would hurt if you get sued, I'm thinking that you are going to go with Adobe, who has a very tight lid on exactly the content and the licensing that it's using to train, potentially to ground their models, their creative models. So, the future I see is 100% bright. If you're a business, who are you going to give your money to? Somebody that gets the job done, that won't get you sued, or one that there's a question on who and when somebody might be able to come after you. What do you think, Dan? What do you think about that thesis?
I think, this is going to be one of the issues of the next, I don't know. Did you see the CTO of OpenAI yesterday? There's that video that went around with her being asked on what they're training the model, the Sora on. And God, what a disaster. I don't know. Look, there's so much here, but I said that about Adobe. Like I've been very pleased with their transparency, obviously, and how they're handling it. It's not perfect, but as we create more and more generated content, Pat, you sure want to make sure that the content you're generating isn't going to get you sued. So it's going to be a big topic for some time.
It is, and just wait till the AI gets smart enough to go in and learn what it's been trained on, and literally the AI is so smart it will come and sue you, and it'll show up in your email box.
AI lawyer. It'll be like was it Demolition Man or whichever one where like if you speed, the ticket just comes right out the dash. If you start speeding, it's just self-policing.
Yeah. Hey, let's move to something related. And, it was kind of a takeoff of what we discussed last week. We talked about OpenAI, about is it open or closed, and, which is better. And I think, profit versus nonprofit. This is a little bit of a derivation of that, but a lot of the conversations at South by Southwest this week were exactly as you might expect: is AI innovation better closed or open? And I participated in a speaking event, and I also attended a related panel that was led off by IBM, Meta, CEO of Partnership on AI, and the co-founder and executive chairman of Anyscale. And by the way, he's a CTO of Databricks as well. And I really appreciated how, I'm not an intellectual. I'm just going to throw it out there. You're probably not surprised, but I do like a good debate, right? Because there's a lot of people that might say closed is actually good, right? I mean, it's better security, right? It's better safety, less prompt manipulation. And gosh, shouldn't the companies that spend $100 million to train an LLM, shouldn't they be paid back for all their investments? So I like it. On stage, they actually red teamed it. And one other thing I liked was the provocative, and Dario just got a huge shit-eating grin on his face, the biggest smile. Hey, can you really scale AI outside of the largest tech companies? And he just got a huge smile on his face, and just talked about how you can disaggregate innovation. People are actually smart enough outside of the largest 10 companies to be able to do this. And a good analogy was Linux, right? Related to the safety and security and can you scale, which is, I don't know if you remember this, Dan, but probably in the 90s, right? When Unix went to Linux, there was this debate on, is Linux safe? And Microsoft was the biggest company that said it's not safe. Only Windows is safe, and very managed Unix distributions. And here we are today, the lingua franca of edge capability and also data center is Linux, and there's so many people banging on Linux that again, nothing is impenetrable, but it is very much a secure operating system. And look at the companies who can innovate off of it is pretty big. And what I liked about the panel is that this wasn't a big commercial for the AI Alliance that's spearheaded by IBM and Meta with 200 members. It was more of an intellectual conversation. I had the chance to interview Dario and Jan Stoica from Anyscale and Databricks, and really had a good conversation diving in, and asked them some really tough questions about, hey, this is great, I saw the press release, but what have you guys done lately? So as soon as we've published this video in a few days, I urge you to go in and check it out.
Oh yeah, this is a big topic, Pat. And I know you did it like through the lens of quote unquote open and closed versus open and closed, but this is a sort of a permutation of the Sam Altman and Elon Musk debate that's going on. And the debate really is, one is who owns this, two is like the commercialization of it, three is the safety of it, four is, should any one company be given a stark advantage through ownership and licensing of a platform? And then, five, and they talked about this a lot on one of the pods you and I like, the All In pod, is about like, what is the legality of, building an architecture like this? So, I like what you covered. I wasn't at this session, so I can't speak to the content at the session itself, Pat, but what I can say is that, I personally think what's going on right now is we need more open than closed. And not to say that there isn't a business in closed, but the problem is right now is we're running into all these issues with LLMs, and lack of transparency is gating us from understanding where we're going wrong. And, this is a snowball. How quickly does it snowball out of effect? Whether it's, like we talked about historical accuracy, we talk about what information is fed. We're living in a world now where, I forget which school it is. It was one of the Ivies or Duke or one of the schools that basically said they're getting rid of essays now, college entrance essays, because kids are writing them with generative AI, and no longer can the admissions counselors actually tell, what's real, what's not, how to discern. And by the way, I realize I'm a tangential of everything you talked about, but this is really important. The world is effectively changing, and we already have entered a world with social media where people are basically ingesting data that is not always fact-based, but we are interpreting it as fact. Now you have a system that is already interpreting data based on a set of algorithms, is spitting out an output that is rooted in bias, because the algorithms all have bias. It's not we won't say which way or what it is, because we don't know, because if it lacks transparency. So an open ecosystem at least forces a higher level of transparency. And this goes back to why Musk is having a fight, after spending $100 million into OpenAI, right, with Sam, is that, he, at least with Grok, he's publishing everything. He's open sourcing and plans to publish everything that's in the algorithm. You've seen it with Twitter, by the way. He's done it with X. He's published the algorithm. Everybody, you have to have some technical chops to know what you're looking at. But if you actually have technical chops, you can understand how it works. The bottom line is opaqueness is going to be problematic, especially when it comes to building these models and when it comes to the outputs of these models. And you have to assume that if we're going to get the productivity gains out of all of this technology, it means we are going to be limited in how much we will scrutinize the outputs of these AI systems. Meaning, you don't get 10x or 100x productivity on emails outbound through your sales without basically assuming that the outputs are correct.
Yeah.
We now have people building content, sending it out to our customers based upon an algorithm, and very little fact checking and accuracy checking, because that's the only way you get the productivity. Otherwise, you're just QAing all day long, which again won't get you there. So I didn't see your session, but this is a huge topic. I love it. I'd love to talk more about it. I realize I derailed a little bit of your specific panel, but Pat.
No, Dan, this wasn't about shilling the panel. This was about.
I didn't say you shilled it. I just meant like I couldn't speak to it.
Yeah.
It wasn't there.
Yeah. You didn't see it. Not asking you to do that, but it was more on the topic, which you did. So thank you.
Cool. Well, got to fight about something, dude.
No, I know. You're my work husband. So
Yeah, well, we're very close.
Hey, let's get into next earnings here. MongoDB is.
Funny, I love talking about earnings. Thanks.
No, I know. I know you're the best. That's why I gave you all of them, because you're the best at it. My
I'm
bestie.
the earnings guy. Dan, the earnings man. So, listen, it was an absolute banger of a quarter. This is another case of strong current, not so good future. So, listen to this. Revenue beat. EBIT, which is something they're still focused on because there really haven't been net income positive. There have been adjusted EBIT positive for a long time over at Mongo. They beat it by 86% and beat the guide by 89%. So huge EBIT beat. And they beat on EPS 48 cents versus a 41-cent guide. But the guide, not great. You hear that?
It sounds like my son.
Yeah, well, millennial here.
My son, man.
Millennial. Well, Pico and I are closer in age. Aren't Pico and I closer in age than you and me?
Yes.
Okay. I don't think that's actually true. But anyway,
it's fun to say.
On a revenue basis, they missed by about 6%, and they missed on an EBIT basis big. They missed on an EBIT basis by like 34%. So a really, really big miss on EBIT, which never ever makes on the annual guide, never makes anyone super duper happy. This is not indicative that the company's doing anything particularly wrong. Again, there seems to be a bit of conservativeness coming from CEOs about what lies ahead. But, there were some other good numbers in here, Pat, that are probably worth pointing out. You've got revenue growth at 27%. You've got full fiscal revenue up at 31%. You had 47,800 customers as of the end of January. So, they're a huge customer base, and 34% on the Atlas cloud, which has been a big focus, is how much of their business is moving to the cloud business. And now it's 68% of their revenue in Q4. So these are areas of strength. The company is, generating cash. It's still, it's still lost on a net basis for the year, which a lot of people, it's so confusing. Adjusted numbers can be so hard to wade through. But, overall, Pat, I think the company's, in good shape. It sets up well. Operational databases, very important in the era of AI. Vector, it's doing a lot of the right things, and it's made the pivot to this recurring cloud-based offering. And so I'm optimistic about it. But, what we saw here, Pat, across the board is a conservativeness in the guide, which I don't know why no one's talking about this, but, this economy is complicated. It is complicated, and it is not as robust as some people think. The jobs reports are all BS, huge adjustments every quarter. We're hearing about interest rate cuts. It doesn't look like we're going to get them. And I'm not trying to over macro, but the overall macro is what drives these guides. These guides are conservative because these CEOs are not feeling as optimistic about the long term. Unless you're selling GPUs, there's a lot of complexity in every other part of the business ecosystem.
Yeah, I like to look at, times like this when a stock gets hammered is, do they have the right roadmap, and are they working to deliver optimal value? And I think the answer is yes. I mean, first of all, if you're looking for a database to do your new generative AI stuff, or by the way, your non-generative AI stuff in an operational database, does it scale to multi-cloud? And the answer is yes, right? Is there the ability to have a generative AI platform, vectorizing, right? Vector database and vector search, checkbox on that. One thing I do know across enterprises, Daniel, is what's stymieing a lot of them is how do I manage my data? And I do think that this opens up the bidding process, which says, hey, should I export my data or send it to the cloud and use kind of an end-to-end Bedrock or a Google Cloud platform like Vertex to do end-to-end AI management, which includes a data platform? I am hearing an incredible amount of conversation about Mongo. in these. I mean, my gosh, even my son, right, who's still in college, he's talking about Mongo. They're teaching him how to do this, and a employer that he did work for the summer, a very large Fortune 500 tech company, uses Mongo, right? Because it was more secure than Honeycomb, and also the vector capabilities were better. So there's also digestion, which is you buy all this stuff, and it takes time for these customers to go out and do something with it. What I'll be interested to dig underneath is do they have enough CX people in the field that are helping their customers? Because the sales motion of MongoDB is like department by department, right? And they measure a lot of this by workloads, right? How many workloads do I have? And those aren't just all sitting in IT. A lot of those are sitting in different departments, right? And do they have the capability to sell into as many of those as they need? And then once the sale is made, do they have the CX and the onboarding team to make sure that they get in and start generating revenue? Good conversation. Data is where it's at for generative AI. I would find it hard to believe that this company doesn't have a shiny future, even though their stock got pounded.
Indeed.
Hey, let's go into a completely different topic, but guess what? It absolutely involves AI. So here's the backdrop. So Plus is a software provider for vehicles and trucks for ADAS and L4. Okay. And we've had them on the 6.5 Summit. Both of us have written articles about them, but they just announced a major deal with one of Europe's largest trucking, I'll call it conglomerates, called Traton. And key messages are this, right? The top 5 OEMs, truck OEMs, have declared partnerships with Plus, and that's I think pretty important. And these are folks like Amazon, DSV, Bosch is a tier 1, tier 2, Luminar, a company that we're familiar with, Nikola, Iveco. These are the ones that are just public. But I think what this does to me is it gives me an element of permanence. Okay. Because not only are they shipping L1 and L2 solutions into Iveco, Nikola, Bosch, Luminar, Amazon, and DSV, unlike their competition, Aurora, Torque, Kodiak, and Wabi, who they skipped over L1 and L2 and went directly to L4, right? Now, we haven't necessarily seen a lot of action. We've seen a little bit of action from Aurora with Amazon with L4, but I'm interested to see in the future what Plus can do here. Ironically, Dan, we covered the disaggregation play that Plus did, where they disaggregated the different elements of their platform. So, for instance, an Intel could use them for a certain piece, but this solution that I'm talking about with Traton actually is an integrated solution that comes in, which to me was ironic because I was expecting this announcement to be about disaggregation, but it was about an aggregated solution. Anyways, that's what I got here.
That's it?
That's it, baby.
All right. So I just had a couple, had the chance to talk to their chief operating officer, Sean Kerrigan. Definitely a great week for the company, being able to announce effectively that 2 of the major 5 autonomy, platform trucking companies are going to go with Plus. Iveco here, and then of course they were able to land Traton. which, probably Navistar is the brand that more people would have known historically.
Yeah.
It is a big moment. And, we're looking by the end of the decade, we're going to see a lot of autonomous trucks. I come from a family, it's in the trucking space. It's funny. My dad didn't believe it would be in his lifetime. Dad, it's going to happen in your lifetime. It's happening in your lifetime. So this is moving very quickly. Effectively, we got sort of three different solutions. You've got totally turnkey, which is what the Daimler approach is. And then you've got the approach that's sort of hardware, software aggregation plus OEM. And then what you really have with Plus is pure software. So it's purely focused on software. The hardware and the truck building is left up to the partner. So that's kind of how the three companies split and create the value add. So they're building block focused, and their building block is software. That's where they truly believe they're able to differentiate. You look at the TAM, you're talking about a market that's got $1 trillion+ of TAM in the self-driving trucking space. It's big. It's a big opportunity. Of course, that's all in. That's hardware, software, and truck, not just the software itself. So Plus obviously can't capitalize on all of that, but it's meaningful. And again, this is directionally really good for the company, which is going to likely need to raise more money. At some point, it's either going to make another big raise, maybe it'll go IPO if enough scale, but having these right partners, having these right OBMs, having, by the way, a West and an East win, with Traton being a West win for US, Europe, and then of course Iveco in China. They really have an opportunity to get meaningful saturation into all of these different markets. And that's important. And then, it's strength and validation that they are best of breed software now, with 2 of 5, one's doing it all in-house. So of all those that are going to be outsourcing the software with Aurora and others, 50% of them have picked Plus. So strong, good win, good moment for the company, Pat. And we've ridden in one of these. I mean, we didn't ride in the L4 ones yet, but we've been in an autonomous truck with an experienced one of these with an L2 Plus driver participation. It's pretty cool, and it's gonna continue to change the world.
Yeah, like what the company's done, they have separated themselves from all China activities. That Iveco is actually in Europe. And I think it's smart. Now they're the software arms dealer to the West for trucking. And by the way, cars, we haven't seen a car announcement yet, but I'm expecting that in short order. I'd like to see the company partnering with all the platform providers out there. Interestingly enough, the ones that I listed for ARM, and I know they already have a partnership with NVIDIA on the platform side, but I'd like to see announcements, platform announcements, very similar to the one, Daniel, we saw with VMware with private AI, right? It's like VMware, private AI for NVIDIA, right? I'd love to see the Plus capability for Qualcomm, for Intel, for AMD. Yeah, a company like AMD needs a company like Plus like crazy, right? AMD is kind of, they're in Tesla through Xilinx, right? They're in some key safety systems, but AMD is a company that needs what Plus does. And then Intel, who has cast off Mobileye and came up with 3 new SoCs for the car, also needs companies like Plus to do that. I'd like to see some integrations in there as well, and not only on the processing platform, because life is more than that, but also on the actuator side, right, and the sensor side is where you need that. So Dan, let's wrap up this episode talking, being some self-serving here, but we have the 6.5 Summit 2024. This is our 5th year, Dan. So bring it on, baby. Why is it exciting? What's new? What are we doing?
We are going to talk about something no one is talking about this year. at our summit, and that is artificial intelligence.
Oh my gosh, you've got to be kidding me.
We're going to mix it up. We're going to do something different. We're going to go in and we're going to, the theme of this year's event is AI Unleashed. And Pat, I could not be more excited. I don't think we could be more excited, more proud, more pleased that our 5th installment, our 5th inaugural 6.5 Summit will be kicked off this year with a conversation with ServiceNow Chairman and CEO, Bill McDermott. We're going to catch it. We're going to have a chance to sit down with him at Knowledge this year at the ServiceNow event. And Pat, we're going to be digging into new enterprise software architectures and what the future of software will look like in an AI-infused world. So that's going to be really exciting. And of course, he joins a multi-year star-studded lineup that has included some of the biggest CEOs on the planet, from Jensen Huang, who has joined in the past, Pat, to CEOs and heads of some of the biggest companies on the planet, Hock Tan, Arvind Krishna. You kind of go down the list, Pat Gelsinger, Lisa Su, Michael Dell. We've had so many great, prolific CEOs over the years, and I couldn't be more excited, more proud to have Bill kicking off this year. And we got a great slate that will come to follow. We're filling that in as we speak.
Yeah, it's fun. Some of the changes, in addition to AI is sprinkled everywhere, is we've added observability to the data platform, and we have a section called Enterprise AI Platforms, and these are holistic platforms and architectures that include data management, the training, the tuning of those, governance, and deployment to end users. I'm really, really excited about that. The other thing we've done is we've opened it up, enterprise apps. We're sure, I think maybe we had ERP and CRM before, but we got every M out there: SCM, PLM, EPM, HRM, MarTech, HCM, field service management, CRM, CCAS, CX. We've got everything. Super excited about that. Here's the other thing, is all of the Moor Insights and Strategy and Futurum Group analysts will also be hosts. So regardless of what you want to talk about thought leadership. You want all the way from thought leadership down to the nitty-gritty of an architecture or an operator, right? We have the specialist in that you can marry up with essentially your best speaker at your company. So that's all I want to say. I don't want to shill anymore. But if you want more information, you can hit up the65summit.com. Dan, I am super excited about that.
It's going to be amazing. I couldn't be more thrilled, more excited, more pleased. It's going to be a mega moment. And of course, with all that's going on, Pat, in AI, just getting the biggest, brightest minds in tech to join us once again is going to be another marquee moment. So thanks everyone in advance for registering, signing up, distributing, sharing. This is going to be great. I'm stoked.
It is 87 days, 23 hours, 55 minutes, and 6 seconds. Are you ready?
Let's go.
I'm ready, baby.
Let's go.
Hey, I want to thank everybody for tuning in this week. Dan, pay attention till we go out. Love you, bestie. I know.
I'm paying attention. I never don't pay attention to you, except when I'm not paying attention.
I know. I'm just jealous that I can't pay attention to multiple things at the same time like you.
Well, we don't know that I do that.
All right. Anyways, folks, thanks for tuning in. We love you. Tell your friends, family, pets, whoever has access to video or audio. And, if you have complaints, you know where to find Dan. If you have accolades and victory laps, send those to me. Appreciate, love you. See you next Saturday.